Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be going over the order block rules, which was the highly requested video on the Instagram. We're going to be going over the rules of the order block strategy and the strategy itself, and I'm going to be talking about how this enabled me to get two really nice trades, one on USDCHF for 2 to 24 risk to reward, and one on EU for I think was about 1 to 10. So yeah, let's get started. What is an order block? Now, I'm sure you're all familiar already with, or most of you at least, are familiar with the basics of smart money concepts, which is what is an order block, right? And if you don't know what an order block is, in the most simplest way possible, without going into the theory behind order blocks, because I can leave that for a separate video because it gets quite complicated. In the simplest way possible, an order block is the last up move or down move before price broke structure to the upside, or so the downside or upside, right? I'll say that one more time. An order block is the last up move or down move before price broke structure to the downside or upside, right? And don't worry, I'll be going through this with the diagram soon, so just stay with the video, right? And order blocks are also known as supply and demand zones, right? So a supply zone is otherwise known as a sell order block, vice versa, and a demand zone is otherwise known as a buy order block, vice versa, right? So it's good to familiarize yourself with these terms, because I will be using them interchangeably, and it's good, for future reference. If you're watching different videos, different YouTubers, it's good to know what demand zone is. Same thing as buy order block. Supply zone, same thing as sell order block, right? And now, why exactly are we trading from order blocks? So let's get that clear. So the reason why we're trading from order blocks is because price needs to return to order blocks in order to close sacrifice capital or negative positions, right? They need to mitigate an order block, right? Because if we go into this example, right, and I just start explaining what I meant by this stuff over here. So if we just go through, okay, an order block is the last, right? An order block is the last. Let's just go with this one first, right? An order block is the last down move before price broke structure to the upside, right? Let's just go through with that. So that is the example. So that definition right there is for a buy order block, right? The things I've underlined just right now, that defines a buy order block, right? And a buy order block is the last down move, right, before price broke structure to the upside. So now let me explain this with this diagram right here. So you can just imagine these lines are price. So first of all, we saw this down move, right? So this down move right here, and afterwards we saw this strong movement to the upside, right? And if we just assume before this there was just some sort of previous structure like this, right? Maybe some equal highs, or some previous support or something like that. You guys know I don't trade support and resistance, but yeah, we'll just call it that for now. Previous structure. So essentially what I'm talking about with the last down move before price broke structure to the upside is that we've got this last down move, right? And this last down move is the last down move before price broke structure to the upside, right? So this was the last movement to the downside before we saw price shoot to the upside and then break structure, right? And creating a new high, right? So that is the buy order block in the simplest way possible, without getting into the theory of what it is, right? About sacrifice capital and things like that. So that's the buy order block. Now let's move on to the sell order block, right? The same thing. A sell order block is the last up move before price broke structure to the downside, right? Is the opposite thing of a buy order block, right? Is supply demand opposites, sell buy opposites, right? It's the same exact concept. So with this, we're going to go over it right now. So last up move, so we'll just assume that again there is some sort of previous support right here, or some previous structure, previous structure over there. So this would be the last up move before price shot all the way down and broke structure to the downside, printing out our new low, right? Now that is simply the supply zone or the sell order block, right? This area right here, that last up move, that is our order block that we will be entering from, or trying to get an entry from, right? We might get a confirmation entry or a find entry or something like that, right? But the fundamentals are that you guys need to know is that this is what a demand zone would look like, and this is what a supply zone would look like. So this one, last up move before down move, right, which broke structure to the downside. Here, last down move before the up move, which broke structure to the upside, right? And we can try MBOS there, which you'll see me do on the charts later on. Now let's move on. So the order block rules. This is the most important part of the video, right? Really listen in here. First of all, with the order block rules, there must always be a break-off structure, right? To the upside for a demand zone and vice versa, so to the downside for a supply zone, right? And I'm just gonna show you guys that right here, right? And by the way, there is a post on my Instagram with all the order block rules, so I'll definitely advise you check that out after this video, because if you ever forget them or you need to see an example, check out my Instagram. That's where all the order block rules are, right? So we'll just go over this first. Oh, didn't mean to do that. So first, there must always be a break of structure, right? So if we just think about our demand zone example, right? So that is some previous structure in price, right? And when I mean there must always be a break of structure and to the upside for a demand zone or a buy order block, right? This is our break of structure right here, because price shot up and broke this structure, printing out our new high or whatever it is, right? Our new high, right? And that is what you need to look for whenever you're trading an order block. That's the first thing you're going to look for, a break of structure to the upside, right? And now we'll move on to the supply zone or the sell order block, and you're looking for the same exact thing but vice versa, right? So we've got this area of previous structure, right? And what I'm looking for here is that from our supply zone, right, from right here, when price shot back down to the downside, we saw price breaking structure, right? We had this previous structure, right? And then we saw price broke that structure, right? That's the first thing that makes an order block valid. Now let's move on to number 2. So secondly, there must be high volume at the order block. Again, let me just draw that out for you guys. So right here for a demand zone, right? So here we've got the last down before the up move, which broke structure to the upside. Right here, I want to see some high volume candles, right? And that can be, you don't need to use any indicators or anything like that. It's just, when you're seeing, big blue candles, things like that, and price shooting up in such, high volume, that the reason why that validates an order block is because the only real entity in the market who can create such sharp movements with sharp volume and who have the capital to make those moves is smart money, is your institutions, your hedge funds, your banks, whatever you want to call them, right? Smart money are the only people who are able to create such sharp movements with a high volume, and that's exactly why I'm looking high volume at an order block, right? So, and then I'll go through again the supply zone, the same thing. So this is our supply zone right here. What I want to be seeing is high volume, right? And like I said again, that would just be in the size of candles. You want to be looking for some high volume candles. I'll show you guys an example, so don't worry if you're getting a bit confused. Now thirdly, the order block must not be mitigated, right? So if I just show you that with the demand zone, right? Now let's just say, right, actually I'll draw this one more time just to make this point. Right now, some of you may be thinking, right now I'm thinking this order block is not valid. Now there's a reason why. Some of you may be thinking, why is it not valid? It's got a break of structure, there's probably high volume right there. The reason is because before price shot up, it created another move which tapped back into the order block. So with that move where it taps back into the order block, price could have, or smart money could have easily mitigated their trades, right, and closed all of the trades that they had a negative, all of that sacrificed capital. They could have closed out of it, right, and easily could have mitigated this order block. So then when price comes back to it, I can just get stopped out very easily, right? And that's what we don't want to happen. So instead, when you're trading an order block, right, you want to ensure price has not tapped into it. There's no tap-ins inside it. It's not mitigated yet, and price is still gonna have its first tap through, and that's where you enter from, or you're from your confirmation entry, wherever it is, right? Same thing applies for a supply zone. Same exact thing, right? Sorry, didn't mean to do that. Right, same exact thing. So our last up move, right there. So if price, had a tap in, right before there, right? We'll do that one more time. Let's say we had this, and price quickly tapped in right there. This would have mitigated the order block, right? Because price, because smart money could have easily closed out all of those negative positions. They could have closed out of all of them, and then when price comes back to mitigate this order block, it won't have to mitigate it because they've already mitigated it, right? There's already been a tap in right there. So now let's move on to the real life chart example. I'm going to break down the 1 to 22 risk to reward trade, and I'll see you guys there. Alright everybody, so here I am on USDCHF, and we're going to be breaking down the 2 to 24 risk to reward trade. So yeah, let's begin. So well, as I go through this trade, we're going to be keeping in mind all the the rules that we went through on the PowerPoint slides, right? And I'm gonna break down step by step exactly where I found each part of the rules, and making sure all the rules were followed. And I'm just gonna be breaking down this whole case study as a whole. So let's begin now. First of all, on USDCHF, right, just off the 30-minute, what we had been seeing previously on the market was that USDCHF overall was quite bearish, right? And what had surprised me is that we saw this huge move to the upside, right? Loads of momentum in this move. So inherently, I'm thinking, right, first of all, there's this break of structure or a change of character. Some people might call it as well now. So whenever there's a break of structure, you need to be thinking to yourself, break of structure, there's most likely an order block which you can find within this area on the lower time frame, which caused this, right? You can find an order block on the lower time frame which causes huge area of momentum, right? Because like I said in the slides, after an order block we usually see huge areas of momentum and high volume candles, right? So now that we've got our break of structure and or change of character, right, what I'm gonna do is, right, I'm gonna focus in on this area that I've got in blue, and we're gonna go down onto the lower time frame, try and spot ourselves a really nice POI, and I'm gonna break that down. So if I just go onto the 5-minute, right, and let me just say what I'm looking for, right? What I'm looking for specifically is that at the last down move before the up move, we brought structure to the upside, right? So we've got a break of structure in here. We know for a fact that there's going to be some sort of POI over here, right? Now we're looking for two things: for there to be high volume, which I'm sure you can guys already anticipate from the higher time frame, there is going to be high volume, and for it to be not be mitigated, right? So now that I'm on this time frame, I think I was on the 10-minute when I found this, right? So actually I think it was a 5-minute, right? Yeah, so right here, so this is the POI I was interested in. So if I just mark this out as our POI, so if I just extend this to the right, I'm going to go over like the thought process behind this and how it follows all of the order block rules, right? So right here, with the buy order block, I said that on the slides, right? I'll just write it down here. It's the last down move before the up move, which broke structure to the upside. I'll try struck for now. To the upside, right? That's what I'm looking for the buy order block, right? And if we just look at this, the last down move, right? This is clearly a bear candle, right? It's the last down move before the up move, right? Which is this whole area of movement right here. So it's the last down move before the up move, which broke structure to the upside, which is what we had right here, right? So clearly, this is a a valid POI in terms of the definition of the order block. We've got the break of structure in. Now we're looking for any mitigation, right? And if I just move this out of the way, and so okay, so I'll write down the rules now. So we've got BOS, high volume, and no mitigation, right? And so if we go through each and every one of these, so we know there's break structure, high volume, we've got that right here. So this would be an example of high volume, right? Right after the creation of the order block, we've got this huge bull candle, right? And then it's followed by these huge areas of imbalance, which would be seen on the higher time frame. I'll show you that real quick. So look right here, huge areas of momentum, right? And so yeah, so that's rule number 2 followed as well. And thirdly, no mitigation, right? There is zero mitigation in this order block. Price doesn't come tap back in at any point. There's no wicks back into the zone. So I'm happy that this is an unmitigated order block and it's ready to trade from. So yeah, so that's the thought process behind why I took a trade from this area. Now if we get onto the entry itself, so I'll just go on to like the 1 hour time frame, move these out of the way now, and I'll just quickly play price. Oh, a bit too much there. and we'll go down to the 5-minute, right? Because I'm actually going to catch the first entry, which is just our normal order block entry, right? Straight off the one, right? And then we'll talk about targets in a minute. Actually, I'm just going to say now, I'm targeting what I was targeting, right, is this area of liquidity, right? Because the price, you know, is going to be looking to take it out as it comes towards the upside. Because after all, this is some sort of resistance that retail traders will be trading from. So smart money most likely is going to come and grab it out. So that is our 1 to 14, as I remember it being. All right, cool. So our 1 to 13. All right, cool. So that's that. And then that for that entry, right? So if I just play price now, you can see we got tapped in there, right? And I need to be careful now. All right, cool. So now that we've been tapped in this entry, right? I saw that price had, so there was this unmitigated area of supply, right? And it was very interesting because price could have easily reacted from it. So I would have taken partials at this zone, right? So when price came about here, I would have taken partials, right? So when I saw that price had broken through this area of structure, I saw that there was another break of structure, right? So most likely there's another order block, right? So price broke through this area of supply, right? And I'll just write this in as another break of structure. So what we know is that there's obviously going to be a POI which created this move, and then we've got this area right here, right? So if price does come back to this area, I'm going to be looking for a re-entry. And if I show you that now, oops, okay, and then same targets again, right? Just wait for price to come into our POI. Speed things up a bit. All right. And price comes in, right? Taps us in, and then I'll extend this one to the right as well. And then we'll just see that price will eventually come back, grab this area of liquidity. There you go. We hit take profits, right? So that's the example of the double entry, right? Total risk reward of 2 to 24, if I've done my maths correctly. Sorry, 2 to 23. And so the thing that you guys need to keep in mind is that we've found a break of structure on both sides, right? On both of these order blocks. Both had high volume, both were valid, right? And they both were unmitigated. So they followed all of these rules, and they can all be defined with this sentence, right? So that's that for USDCHF. Let's move on to EU. Alright everybody, here I am on EU, and we're going to be breaking down the trade again. So again, I had seen that on the higher time frame, right? If I just replay price, there had been a break of structure, right? So we had this area of structure created, and then it got broken, right? And so what does this tell me? That there's most likely a POI hidden within this area of high momentum, which will, you know, be an order block. I will need to check if it's valid, right? Because sometimes on the 1 hour time frames, you'll just see order blocks, right? For example, there's literally an order block right here. It's the last down for the up move, which broke structure, right? And someone could have entered from there, caught this whole move to the upside, right? But sometimes POIs and order blocks are hidden within these huge areas on the lower time frame. So make sure you always check out your lower time frame whenever there's a break of structure. So I've identified my break of structure, and in fact, we even broke structure to the downside here just by a bit, right? So you could have even wrote that as your break of structure, but I'll just keep it here for now. And so what I'm going to do is I'm going to go on to the 15-minute, right? And there could very well be a POI within this area, right? So for example here, or within this wicked area over here, something like that, there could be a POI, right? If I move down to the 10-minute, that's exactly where I spotted this area right here, right? And by definition, this is a really nice order block. Why? Because for our supply zones or our sell order blocks, we're looking for the last up move before the down move, which BOS to the downside, right? And by definition, this is the last up move, right? The last bull candle or the last buying area before the down move, which broke structure to the downside. Now, if we quickly run through the rules, we've got our break of structure, right? We've got that areas of high momentum. Look right here, these huge series of candles, right? And lastly, this order block is not mitigated at all, right? There are no wicks back into the zone. There's nothing there's no point in time where price maybe like wicked back in here or there, or you know, price hasn't come back and tapped into the zone yet at all. So now we're just going to be waiting for price with our normal 1 entry, right? So entry at the 1, stop loss at the 0, right? And we've got a 10-minute entry, so the stop loss is quite tight, so 5 pips, which is great. And then in terms of targets, I'll play price for a bit longer. Right, I'm actually gonna have to extend this out. And then if I go to the 30-minute and I just play price slowly. Alright, so now that we're entered in, if I just speak about targets, right, because on EU, there was a specific target that I was aiming for, right? So right here, on the, I don't think it'll show on the 30-minute, no it won't. So on the 15-minute, right, there was this area of possible demand, right? And it's very hard to understand why, or maybe it's not, because this is still a last down move before the up move, which broke structure right here to the upside, right? So it's very possible price can come in here, and if I don't take profits, it can come out and stop me out, right? So that will be where the overall take profits are. Not at the low where we expect price to grab liquidity, but instead over here, because I don't know, price could mitigate this demand zone, right? So we want to stay safe. And if I just play price, there we go, hit take profit, right? But the key thing is that we use the right take profit, because you guys will see, if I just get out of replay mode, that eventually price does take off, right? So if we had waited for price to break all the way down to this low, we would have been, you know, eventually stopped out. I mean, be on a break even if you manage risk correctly. But regardless, we had that that really nice exit, which, you know, secured us without any, you know, worrying about price stopping us out later on due to this demand zone or demand zone down there. Yeah, but that's it for this video. Hope you guys enjoyed, and I'll see you in the next one.